Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, July 29th. The S&P 500 and the Dow are lower this morning following weak economic data and poor earnings from oil majors Exxon and Chevron. However, the good news, a surge in Alphabet and Amazon shares after their earnings announcements last night is keeping the NASDAQ in positive territory, so far anyway. Investor sentiment has been dented by a slower than expected growth in U.S. gross domestic product. As well, Exxon shares fell 4% after the oil producer reported a lower than expected quarterly profit. Fellow Dow component Chevron shed 2% after posting its biggest loss since 2001. Wow. These two stocks were the biggest drags this morning on the S&P and the Dow. Now let's move on to three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at our daily chart of the S&P 500 SPDR, the ETF that is the tracking, we can call it the tracking stock for the S&P 500 index. Now, as you all know, we have been hovering at all-time highs and making even more of them in the last 2 weeks. As you can see here today, when I captured this chart, the SPY was trading at $216.29, about $21.62 on the S&P 500 itself. Now we had a July 22nd all-time closing high, this little green candle right there, at $217.24. Of course, closing highs are very important because that means people are willing to hold overnight. Although the next few days or the following week that we've looked at, the SPY has just been trading. Actually, for the last 2 weeks and change, it's been trading in this odd kind of wait and see. We can call it a bull flag, but it's getting a little long in the tooth to be called a flag. We do have to call it a consolidation right at the highs here. You can see the S&P 500 is waiting. I guess it's waiting for good news out of the earnings reports that we're seeing. Out of economic reports, it isn't getting that so much. And again, it's in a wait-and-see mode here till it sees whether it wants to move higher and break out higher over 218 and continue this uptrend, or whether the index is going to give it up for and get some profit taking in here for the beginning of August and into August, as is the case many times during the year. Now, if we look down here, we see the 50-day moving average is coming in here at $2. Excuse me, the 50-day moving average is coming in here right at about $211 on the SPY. Our June 8th high was $212.52. So there's potential support right there at $212.52, at $211 with the 50-day moving average, and then on down to 206, 205, and of course the 200-day moving average coming in at about 204 at the moment, which is also support. Price support from back in May. So there's a lot of support here if the SPY decides to rest for the month of August and get some profit taking in. There are plenty of places that buyers could come back in and pick it up. So we may see, if it does go lower, we may see trading in a range here, possibly even from, say, about 207.50 up to 217. That would probably be acceptable to most of us, excuse me, and far more acceptable than having it fall lower. If we look down for more information on the 14-day RSI here in the center scale, we see that it is just barely melting lower here. It certainly isn't going higher. While the S&P 500 goes sideways, it's melting lower a little bit, Finally, our MACD, our Moving Average Convergence Divergence Oscillator. We see now that the black line, the MACD line, is rolling over a little bit and coming into contact here with the signal line, the 9-day signal line. Should the MACD line, the black line, roll below the signal line, then we may look forward indeed to some profit taking. The MACD is a very slow trend following indicator, so I look for it to confirm movement in the RSI. And these two indicators together, with the RSI being the quicker and the MACD being the slower, they can give us information many, many times that even price doesn't tell us right off the bat. Finally, we've had very low volume in this sideways move in the last couple of weeks. I know people have been waiting for the Fed announcement, been waiting to see what European banks will do as they are looking a little weaker. So a lot of wait and see going on right now, and of course a lot of the institutional traders are away for the summer. So we too will wait and see what the upcoming week brings. Our next chart today is a chart of the iShares Russell 2000 ETF, symbol IWM. As many of you know, the Russell 2000 is the small cap, one of the major small cap indexes, and we watch it many times because it can act as a leading indicator as to what will happen in the broader market. As I told you before, components of the Russell 2000 are usually U.S.-centric. They're based in the U.S. They don't do business outside of the U.S. So this gives us kind of a picture of the American, or the U.S., I should say, companies. And if they don't feel good, then usually the market doesn't feel good. And if they stay strong, then that's a good sign. We've seen this kind of crazy, and I'm going to say crazy because you don't often see this, kind of a crazy consolidation in the IWM again in the last 2 weeks. Now the all-time high for the IWM is $129.10 back in June 2015. This Wednesday's relative high right here was at $121.47. And as you can see, that's even higher than the November highs back in 2015. It's a little bit higher than the November highs, so it's moved up above that. But we're basically in the 120 range here, basically in that range. And now we see if the IWM, like the SPY, can it break out here? Can it move above 121 and start higher and continue this uptrend? Or does it succumb to profit taking, move back down? And I'm going to say here 118.50 is my support line for this consolidation. That's about where the 20-day moving average comes in right now. If the IWM starts to head south here and get some profit taking in, I think you can use it as keeping an eye on it. It's a good idea, because if it starts south, then the SPY and the other indexes probably will soon follow. The RSI here is just moving sideways right about at 60. The MACD lines, however, have come together as they would with a sideways move. The MACD line is now even with the signal line, but it's above zero and it's holding up nicely. We just have to keep an eye on IWM price, again, to see if it breaks 1850 or in the coming week has the strength to move up and over 121. Either one of those will give me hints as to where the broader market will go. Finally, we're going to look at a chart we haven't looked at in a long time. This is the iShares U.S. Real Estate Exchange Traded Fund, symbol IYR. The IYR is the iShares, I just said it, U.S. Real Estate ETF, pays an annual dividend of $4.62. Now, what happens here is when you see bond yields so very, very low, and they're low all over the world, and ours are low too over here, when you see bond yields at that low, people are seeking yield. They're seeking dividends. They're seeking interest. And so one place you can get that is with REITs, or the components in the IYR. You can see what a very nice move up, orderly move up I like, that the IYR has had recently. And if interest rates continue to move down, I suspect the IYR could continue to move up. When I captured it today, it was trading above its 20-day moving average at $85.28, above its 50-day moving average coming in at about 81, and certainly above its 200-day moving average. It's in a nice uptrend. I see volume tapering off here as the IYR has kind of moved sideways, down a little, up a little in the last week. We do have low volume, as we do in almost everything. The MACD here is consolidating, although it's above the zero line. The RSI is nearly overbought, so what I'm going to wait to do is to see in the coming week if the IYR can get back down to, say, 84, even 83, as long as it stays above the 50-day moving average, again coming in at 81 now. I'm going to keep an eye on the IYR, because if interest rates continue lower into August, I believe that this REIT ETF, some of its major components are SPG, which is Simon Property Group, big mall people, American Tower, Public Storage, Crown Castle International. Those kinds of companies are in this. Again, it pays an annual dividend of 4.62%, which is decidedly nicer than what the 10-year pays. So I'm kind of hoping it'll move down here again to 83, 82. As long as it's above the 50-day moving average, I'll be interested in keeping an eye on the IWR as something that will be interesting in a low interest rate environment. Now we'll go on to next week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity for you to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members a few minutes after the session ends. And now for the coming week's economic reports. First, please remember that we are still in second quarter earnings season, and hundreds of companies will still be reporting each day. On Monday for economic reports, we have the ISM, or Institute of Supply Management, which is a monthly report that's important for our manufacturing index. On Tuesday, we have PCE core prices, auto and truck sales. Wednesday, we have ISM services, the ADP employment report, and crude inventories. Thursday, our usual weekly jobless claims. And Friday, we have our monthly jobs numbers with the unemployment rate, and of course, that is always watched. That is always something that traders and investors watch. That also gives hints as to what the Fed may do next. Join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.